Sema.
Same.
Yes.
Sema, I forgot to know.
You don't know what taxation is. Mercy.
Same.
Yeah. Tell us what is taxation.
It is a composite. Hey, same.
Imposed on individuals. Sema, we forgot to.
I want to hear. What is taxation?
Taxation is the compulsory payment of money
Is a compulsory payment
imposed on individuals by the government to finance its policies.
Is a compulsory payment of money imposed by government. I see. Mercy, I'm still waiting for you.
Hey, wait.
Sema, I said it all. Oh.
No, that you have said your own. That doesn't mean that yours is right or wrong. Yes, Mercy. Yes. What do you understand by taxation?
It is let me try. As if hey, I assume.
Eunice.
What I can remember is that it is a compulsory levy or a charge.
Nicholas, what is taxation?
My understanding is taxation is the levy of tax that is imposed on individual.
Can you come again?
I'm saying that my understanding of taxation is a levy of tax that is being imposed on individual.
Okay, it's a levy or tax imposed on individual. You see, if the reason why most of you might be having the challenges in the taxation is that if you yourself, you don't even know the definition of taxation, then if you're having challenges in the taxation, are you getting the scenario? So a definition like taxation, when asked, you should be able to give it solid. Are you getting it? Because you know taxation is imposed by who? The government. And it is compulsory. Are you getting it? So somebody will tell you that taxation is the imposition of compulsory levies on individuals or entities. It is not only individuals that we tax. Are you getting it? We tax individuals and entities by government. So when you say it like that, they know you know what you are saying. So it's the imposition of compulsory levies on individuals or entities by the government. So where the government charge you to pay an amount of money from an income you have earned, it is considered what? Tax. And we have example of tax: property taxes, tax, gift tax, income tax, corporate tax, on and on and on and on and on. I get it. So you should be able to know, and you know that a failure to pay a tax or evasion of tax is punishable by law. Taxes consist of direct and then what? Indirect taxes. Now, at the beginning of the lecture, we learned that for a person to be taxed, First of all, the person must earn income. If you don't earn income, you don't pay tax. And the phrase, if you don't earn income, you don't pay tax, that doesn't mean that if you don't earn income, you don't file for tax. And that is what people don't understand. And they don't even go and do their tax filing. So if you don't earn income, doesn't mean that you cannot go and file your tax returns. But if you don't earn income, you don't pay tax. Because when you don't earn income, what are you going to pay for? That is what it means. At the end of the day, we came to the realization that when one person is supposed to pay a tax or an individual is supposed to pay tax, first of all, the tax you pay is on an income you have earned within the jurisdiction of the taxable and or within the jurisdiction of where the tax is being levied. So when we take Ghana, for example, the income you are supposed to pay the tax on might have been earned or received in Ghana. So when you earn the income in Ghana, you pay the tax on it in Ghana. When you receive the money in Ghana, you pay the income tax in Ghana. Now, where the challenge arises is that every country is a sovereign state or is a sovereign nation. And when we say a sovereign nation, they have their independence, they do their things basically using their own law. Every country has its own constitution that guides it. And so therefore, every country has its own system of taxation. So this footballer who plays in Germany, and he's a Ghanaian born, plays football in Germany. He has been paid his money in Germany. The German government have taxed him. Then he came to Ghana. The money was transferred into his account here in Ghana. Then Ghana government too is also taxing him. Then this German footballer or this footballer becomes furious. Then he's like, why is it that the same money the German government tax me and then Ghana government is also taxing me? So does it mean that if I'm transferring the money again to Nigeria, Nigeria government is also going to tax me? Does it mean that if this money they are transferring to me, they have to transfer it through South Africa, through Egypt, before it gets to me in Ghana, they'll be taxing this money along the line. So this person will be raising questions and then will be fighting the tax authorities. That why are you doing that? You are taxing me twice or 3 times. And that is what you call double taxation. Now, if a situation like that has happened, you can see that the taxman is defecting his own canon of taxation, which he states that there should be equality or there should be equity in his or his tax regime. So people begin to question that particular principle of taxation. Now, at the end of the day, how do the taxman solve this particular problem? The taxman needed to solve this problem by going into an arrangement with the other countries, because you cannot tell the other countries that, hey, please don't tax my people. You can't do that. You have to go into an arrangement with them that, okay, any Ghana person in your country, whenever they generate an income, please, when you tax them and they come here, I won't tax them. Or don't tax them, I'll tax them here, or whatever. Then they also tell you that, okay, me to my people in your country, do the same thing. So whatever I do to the right, you do to the right. What countries do is that they go into an agreement with other nations and then they strike the deal on how they tax their citizens or how they tax their citizens who are international expatriates or they are expatriates. I get it. And that is what brought about double taxation agreement. So in your lecture notes, we're told that, or it has been written there, that the introduction. So if you have your hand out, you open to the introduction. According to the Ghana tax law, resident person pay tax on their global income. And then they cite an example. Assuming Kominka, a Ghanaian who stayed in France for 5 years, and due to his hard work, he has investments there from which he receives some returns. The UK government will tax him upon remittance to Ghana. Should he be taxed again? This is a question. Sound like the one I just cited for you. This is a typical question they are asking. Now, should such a person be, should this footballer be taxed again? This is a bigger question. So when we go into this double taxation agreement, it mitigates the effects on this taxpayer by paying the taxes what? Twice. So what we do is that, okay, if the tax rate in Ghana is 25%, and then the tax rate in the UK is 15%. Now the UK government have already taxed you 15% on the money that you have gotten. So when you come to Ghana here, technically you have to add up another 10%. So you pay just 10% to the Ghana government here. So it means that instead of paying 25% here in Ghana, we have acknowledged that you have paid and already 15% to the UK government. So you pay only 10% in Ghana. The same way, if the tax rate in Ghana, in UK is, let's say, 30%, and then you pay 30% of the income over there, and then you come to Ghana and you are supposed to pay 25%, we will now say that, okay, since you have paid 30% there, in which you are supposed to pay 25% here, we will not tax you again. I get it. Then the person will be raising questions like, okay, if I pay 25, I pay 15 there, where I'm supposed to pay 25 here, where you have been asking me to pay the difference of 10. Then if I also pay 30 there and I come here, then come and give me a difference of 5. Then Ghana government will also say, me too, I won't give it because you didn't pay that 30% to me. So that brought about a lot of changes, or that brought about a lot of amendment to how double taxation is being treated. So when you look at what is in your handout as we speak, is the first example that I've cited to you. So if you pay more in the foreign country and you come here and what you are supposed to pay is less, then you don't pay anything. If you pay less over there and what you come here, when you come here, what you are supposed to come and pay is more, then you add the difference to it. I can say that is basically what is in your handout. It has not been updated, which I suppose so. So I'll go with you and then I'll explain how the new system or the new regime is supposed to do, or how we are supposed to treat double taxation in the new regime. Now, the next question is, if you needed to go on a double taxation regime, then, or if you are saying that before your double taxation, you can eliminate double taxation as a country from your system, then there are certain things you must do as going into an agreement with certain countries. So one person will ask, so does it mean that Ghana is having the agreement with all the countries in the world? No. Ghana is not having the agreement with all the countries in the world, because some of the countries, they are so stubborn. They don't want to listen to you because they don't care about you. So that your double taxation agreement, they know they are getting peanuts from you, so and you are getting more from them. So because they don't want it, they will not allow the double taxation agreement. Currently, Ghana is in agreement with 11 countries. Ghana is having a double taxation agreement with 11 countries. And those countries, we call them double taxation treaties. We call them double taxation treaties. So we have France, we have the United Kingdom, we have Belgium, we have Italy, we have South Africa, we have Netherlands, we have Denmark, we have Germany, we have Switzerland, and then finally, you have Mauritius. I will take them again. The countries Ghana is having double taxation agreement with. We have France, United Kingdom, Belgium, Italy, South Africa, Netherlands, Denmark, Germany, Switzerland, and Mauritius. So these are the basic, or these are the countries in which Ghana is having an arrangement with when it comes to double taxation. Now, when it comes to taxation or double taxation, we have methods that we use in double taxation, or the methods of double taxation. And we have two main comprehensive methods. We have two main comprehensive methods, namely the tax credit reliefs and then specific exemption, sorry. Tax credit reliefs and then specific what? Exemption. So let me take the tax credit relief. And you already know tax credit relief, I get it, is granted where the income is not covered by one of the exemptions. It provides that if a taxpayer who reside in one contracting countries, so when I mean one contracting countries, I mean the double taxation treaty. So like one of the countries in which Ghana is having an agreement with. So example, like Germany, okay, so he received the income which is also taxed in the other country like Ghana. I get it. Tax payable under the laws of Ghana shall be allowed as a credit against the tax of the country Germany. I get it, on the same income. I get it. That is the tax of the country where the income arrives, that is Germany. I get it, is to be set against the tax of the country of what? Residence. So as I was saying, maybe you pay a tax of 15% there, and then you are supposed to pay 25 here. You set against the 15 against the 25, and then you pay the difference. That is what we mean. Now, there are certain specific incomes, or there are certain specific gains that we don't pay or double taxation exempt them. All right, Mercy, you have a question?
Yes, Emma, please. You said you, for instance, if you are paying 15% in Germany and you are paying 25% in Ghana, you said the two and you pay the difference. Asking, I don't understand. So if you are paying in Ghana here, will you take off the 15% and pay the difference of the 10%?
Yes, please.
Oh, okay. Because you have already paid the 15% there.
Yes, and because we are having that agreement with them, so we don't want him to pay 15 there and come and pay 25 here. Other than that, you are being taxed twice. We are paying 40 instead of paying 25. I get it.
Okay. So, Emma, please, does it mean that where, for instance, if I'm a resident in Ghana here, I don't even, okay, I'm working in if I say Germany. That's where I work. That's where I get the income.
Yeah.
Is it always where I'm working and getting the income, which is transferring to Ghana here? And is it always that that place is lesser than maybe Ghana, or
No,
it depends on their tax system?
it depends on the country's tax system.
Okay.
So their own can be more than
okay.
yes. Their own can be more than yours, and yours too can be more than theirs. I get you the scenario.
All right. Okay. Okay.
Now, there are specific items that are exempted from these double taxation treaties or this double taxation we are talking about. Number one, interest. Number two, patent and copyright royalties. Teachers visiting for not more than 2 years. Pensions other than government pensions. Payment for the service of temporary business visitors. So these people, these incomes, we don't tax them at all. So we just exempt them. So we don't say the person earned the income over there, come here, then you are just taxing. No. So we take those things out. Now, the very crucial one you should be able to identify. Now, for examination purpose or for assessment purpose, you should be able to know the countries within which, or the countries in which Ghana is having an agreement with, the countries, the double taxation treaties. I'm specifically mentioning the word treaties so that you not see it in an examination and then you'll be fumbling. I get it. I'm specifically mentioning the word so that when you see it, you know what they mean. Double taxation treaties. So when you know the word or you know how it is mentioned, anytime you see it, you know that, oh, this is what they mean. They mean the countries that Ghana is having double taxation agreements with. I get your name. So you see double taxation treaties, don't panic. They mean the country coming, the countries Ghana is having double taxation agreement with. The spelling of treaties is Treaties. You write it down. Treaties, double taxation treaties. So wherever I see it, we mean those countries. Now, there are certain conditions. So in an attempt to know the treaties for examination purposes, this is the second punchline, or this is the second thing you must take note of. Conditions that must be necessary before you grant double taxation credit relief. So before you grant a double taxation credit relief for somebody, there are certain conditions that must be necessary. And the first condition is that relief used to be given only if there was an agreement with the country in which the income arises. So for you to grant somebody a double taxation relief, or you must grant somebody tax credit relief, first of all, the country within which the income was generated from should be a country that falls within these 11 countries I've mentioned for you. So if they've mentioned a country that, oh, he earned an income from Nigeria, the mere fact of mentioning Nigeria, know that there is no tax credit for this person. There is nothing like a double taxation tax credit relief for this person. The mere fact that the person says Nigeria, it is out. You can't do anything double taxation. But when they say France, Belgium, UK, Switzerland, Mauritius, Italy, Germany, they know that yes, the condition one has been what? Fulfilled. Number two, the person who is claiming the tax credit relief must be a resident of Ghana. So the country in which you are before you are claiming that particular tax credit relief, you must be a resident of that country. So you must be a resident in Ghana before you can claim the tax credit relief. That is basically what we mean. Number 2, the relief is supposed to be measured by reference to the amount of tax you have paid over there and the amount of tax you are supposed to pay here. So these are the conditions necessary before a tax credit can be allowed to an individual. And you must holistically satisfy all these ones before you carry it. If you have any question, you raise up your hand. I'll call you and then you move on. The next area you are supposed to also take note of, or you are supposed to know, is the advantages of double taxation. Yes, Eunice, let's hear you.
Please, I heard of like 11 countries, but my own is 7.
Your own is 7. I've mentioned the countries. You didn't hear?
My network was very bad today.
France, United Kingdom, Belgium, Italy, South Africa, Netherlands, Denmark, Germany, Switzerland, Mauritius, and Czech Republic. Should I go over again? France,
Okay.
United Kingdom,
Yes.
Belgium, Italy, South Africa, Netherlands, Denmark, Germany, Switzerland, Mauritius, and Czech Republic. These are the 11 countries to which Ghana is having double taxation agreement with. Are you okay?